In the name of Allah, the Compassionate and the Merciful. Hello guys. My name is Salar Delawar Qashqai, and in this video we're going to talk about the financial income statement optimization based on uncertainty conditions, finding the best fitted pessimistic and optimistic revenue using Monte-Carlo method with using beta probability distribution function. In this example, we have financial income statement, and we defined it net income margin as you see in here with definition of minimum and maximum based on different quantile, for example 25 quantile and 75 quantile for maximum. We wanna find the best optimum revenue, best fitted optimum revenue, and finding the minimum and maximum of this value of these distributions. And we have different parameters in income statement. Let's back to the Python code. You see in here I defined many functions, and in income statement you see that the minimum and maximum revenue comes to this function, and then all the parameters is going to be defined with your own, and at the here gross profit is going to be calculated, and then net income going to be calculated, and also at the end net income margin going to be calculated. So in here minimum and maximum revenue comes in here, and the output of this function is net income margin. And you see in net income optimization revenue, you see I defined the function for finding the feasible solution for calculation of this minimum maximum revenue calculation, and if it is converged, so it's going to be stopped, and if it is not stopped, so you must increase the size of grids and even mesh or other, finding the other solutions. So if we run this code with the definition, for example I defined minimum quantile revenue as a 5 and 30. You see I defined in here 5 and 30, and also number of samples for our modeling equals to 10,000. Number of meshes for converge iterations, it's equal to 100, and minimum revenue initial guess I defined between this minimum and maximum value. You see after running this code, you see after 70 seconds the feasible solution is going to be found with this number of iterations, and you see that this difference is very low, so it shows that it gets the best fit based on our analysis to finding the minimum and maximum revenue. In here you see that it shows that the minimum revenue and maximum revenue based on this triangular distribution. You see that we have at the first we defined the triangular distribution based on beta distribution function with this shape as a alpha equals to, let's back to the code. You see in here for different parameters we defined different coefficients of alpha and beta You see in revenue we defined alpha equals to 1 and beta equals to 2. But other parameters such as cost, we defined different values. For example, for cost, direct labor cost, I used alpha equals to 2 and beta equals to 1. So we want to find a critical revenue based on uncertainty conditions of our modeling. It's so important for us, okay? Because of that, I use this coefficient for our modeling. And let's see. It shows that the revenue and it shows that the minimum and maximum optimum revenue is going to be shown, and also the optimum net income margin based on this revenue. You see that we can use this kind of analysis when we have uncertainty conditions for calculation of forward or next our futures net income, and we want to satisfy and find the best fitted revenue, best future revenue for these calculations, and finding the solutions for our and having a plan for our futures of our company. So thanks guys. Thanks for following. Please have a comment and tell me know about this kind of modeling. Bye.